A cartel can have a very unusual problem. It can have too much cash. Not too little, too much. Drug trafficking can generate enormous profits, but a pile of cash is not the same thing as usable wealth. The larger the operation becomes, the harder that cash is to explain. This is where money laundering begins. The objective is simple: make criminal proceeds appear disconnected from the crime that produced them. The money doesn't simply disappear into a bank account. Instead, it can pass through layers of people, businesses, accounts, assets, and transactions. Each layer creates more distance from the source. One of the most important characters in this system is not necessarily a cartel member. It can be a money broker, someone whose job is to move value between people who do not want to appear directly connected. In many investigations, the laundering organization operates almost like a separate business. The cartel generates the money. Other people specialize in making that money harder to trace. The person controlling the drugs may never meet the person moving the money. Messages pass through intermediaries. Instructions pass through intermediaries. And the money passes through intermediaries too. One common piece of the puzzle is the shell company. A company can have a legitimate purpose, but criminals can also abuse corporate structures to hide who ultimately controls money and assets. That's what makes the system hard to see. The businesses can look ordinary: an office, a trading company, an importer, a property company. Nothing about the name automatically reveals what is happening behind it. Then comes the paperwork: invoices, contracts, bank transfers, business records. A transaction that originally came from crime is surrounded by documents that make it look like commerce. The trick is not necessarily to make the money invisible. It is to make its explanation complicated. If investigators have to follow dozens of companies across several countries, the trail becomes much harder to understand. Another major method is trade-based money laundering. Here, financial value becomes connected to goods and international commerce. The merchandise may be real, the business may be real, but the financial activity surrounding it can be manipulated to disguise illicit proceeds. A container moves across an ocean. On paper, it represents ordinary commerce. Behind the scenes, investigators may later discover that the transaction was part of something much larger. An invoice can become another piece of the disguise. The important question for investigators is not simply whether an invoice exists. It is whether the transaction makes economic sense. That is where the accountant becomes important. Thousands of transactions can look meaningless individually. Together, they can reveal a pattern. Cash creates another problem. Large amounts are difficult to move, store, and spend without attracting attention. So, laundering networks often try to convert physical cash into other forms of value. Sometimes, ordinary people become part of the network. These are money mules. Their accounts, identities, or businesses can become links between different parts of the operation. One account might not reveal much, but hundreds of accounts can create a completely different picture. Money enters, money leaves, and the network repeats. Imagine the system from above. Instead of one river of money, there are dozens of streams. They split, they merge, they disappear into different financial channels. Some networks also use mirror transactions. The physical cash may remain in one country, while an equivalent value is made available somewhere else. The goal is to move value without necessarily moving the original cash across the same border. Now the map becomes international. Mexico, the United States, China, Latin America, Europe. Different investigations have uncovered financial networks stretching across multiple jurisdictions. This is where underground banking networks can become important. They operate outside conventional banking channels while still allowing value to move between people and countries. The cartel, therefore, doesn't always need to build its own financial institution. It can rely on specialists, brokers, couriers, business owners, financial intermediaries, and people who understand how international international money movement works. Then there is real estate. A property can transform suspicious wealth into something that appears tangible and legitimate. A building, an apartment, a piece of land, an asset with a legal owner. And once illicit wealth begins appearing as ordinary assets, the original source can become harder to see. The money no longer looks like drug proceeds. It looks like property. Then technology changed the landscape again. Cryptocurrency became another potential channel for moving value. Recent investigations have documented cartel-linked laundering networks using digital assets alongside traditional methods. To some criminals, digital assets can seem attractive because money can move across borders without physical cash. But digital does not mean invisible. Transactions on public blockchains can create permanent records. Investigators can sometimes analyze those records and connect digital transactions to real-world people and organizations. And this is where the story changes. The investigator enters, not looking for one suspicious transaction, looking for patterns. A transaction becomes interesting when it doesn't fit. An account suddenly becomes unusually active. A company moves amounts far beyond what its business appears to require. A transaction has no obvious economic purpose. These are the kinds of patterns financial institutions are trained to identify and report. Imagine a company that claims to do one thing, but its financial activity suggests something completely different. That mismatch can become a clue. Then there is volume. A business that normally moves modest amounts suddenly becomes the center of enormous financial activity. The numbers themselves become suspicious. Investigators begin connecting the dots. Bank accounts, companies, phone numbers, travel records, property, cryptocurrency wallets, people, countries. And eventually, one name can appear again and again. Different companies, different accounts, different transactions, but the same people keep appearing somewhere in the background. Physical cash can also provide a lead. Couriers can be stopped, cash can be seized, documents can be recovered, and suddenly, investigators have something concrete to work with. A seizure is more than the loss of money. It can become evidence, serial numbers, packaging, documents, communications. Every detail can potentially connect the cash to another part of the network. Digital evidence adds another layer. A cryptocurrency transaction can create a trail that investigators may follow long after the transaction occurred. Then the investigation becomes international. One country may have the bank records, another may have the company, another may have the suspect, and another may have the property. This is why large laundering cases can take years. The investigators are not simply following money, they are reconstructing a network. Sometimes the breakthrough comes from financial records, a spreadsheet, a bank statement, an invoice, a company registration. Something that looked meaningless suddenly becomes evidence. And once investigators understand the structure, shell companies become less useful. The names no longer matter, the people behind them do. The money broker can become one of the most important targets. Because the broker may connect the criminal organization to the financial system, investigators then follow the assets, properties, vehicles, businesses, accounts, digital wallets, anything that appears inconsistent with legitimate income. Eventually, the trail can reach the people at the top, the cartel financier, the person who doesn't touch the drugs, doesn't carry the cash, and may never appear in the original investigation. This is what makes the system so difficult to understand. Billions of dollars don't necessarily move as one enormous transaction. They can move as thousands of smaller relationships. And that matters because laundering is not simply about hiding money. It can help criminal organizations preserve their power. Pay suppliers, pay corrupt insiders, acquire assets, recruit people, and continue operating. The real weapon is therefore not the cash itself. It is the financial infrastructure surrounding the cash, the people, the companies, the accounts, the transactions. And when investigators shut down one network, another can appear. The names change, the businesses change, The technology changes, but the underlying problem remains the same. From above, the entire system starts to look like a giant web. Cash at one end, businesses in the middle, assets on the other side, and hundreds of human connections holding everything together. But money leaves a shadow. Every transaction creates information. Every company leaves records. Every asset has an owner. And every network eventually makes a mistake. That is how investigators begin. Not with billions, with one transaction that doesn't make sense. The money may disappear, the trail doesn't. If you want to see how investigators follow that trail, subscribe to Black Ledger.